Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Sonia Shenoy and Prashant Nair. And there's been a sudden fall in the market, guys. We were cruising along in the green. The Nifty was actually about that 18,660 mark with a gain of about a couple of points. But now as we speak, we're down 70 points. And just look at the sell-off that's taken place in the last 30 minutes. And it's been a broad-based sell-off. The Nifty Banking Index is down 150 points. The Nifty Metal Index is lower. Nifty Real Estate is lower. The Auto Index has seen a slide. The IT Index has seen a slide. So it's not just one particular sector or stock or necessarily the interest rates which are leading the decline now. It's been a broad-based sell-off. Talking about individual names, IndusInd Bank, Bajaj Finance, SBI, Ultratech Cement, Bajaj Auto, Reliance Industries, that big boy too, has taken a bit of a knock in the last few minutes. Right now, it's 18,570 on the Nifty. One of the levels to watch will be the 20-day moving average, which is 18,440. A big talking point today has been the kind of decline that we've seen in crude prices. Brent crude is hovering below $80 per barrel. And remember, even before the war broke out, the average in the month of November and December was $75 per barrel. So we've pretty much erased all the premium in the crude market on account of the war. So that's going to be, fairly important. And we've had some big voices, right, that we've heard through the day, and they sort of sounded a bit skeptical.
I think it was Madhukela who said, right, don't get too carried away by that big bell ringing at the gong. And I also think that the market was maybe holding up just to respect sort of the 23rd birthday of CNBC-TV18, and then bam comes that sell-off. But just a couple of takeaways from the RBI policy as well. Largely in line with expectations, so the market has perhaps moved on. 35 basis points rate hike. The GDP growth forecast has been cut a tad bit, so maybe that's a little bit of a disappointment. The inflation forecast, though, is unchanged, and the policy stance has been maintained at the withdrawal of accommodation. Prashant, we were discussing this in the morning as to how this 20-day DMA of 18,430 is something that the market is holding on to. But by and large, now we are devoid of any major positive trigger. Maybe that's where the market is sulking.
Possible. You know, it's strange that the market started selling off exactly at 1040. I mean, I'm just looking at the figure. The Nifty rate at 1040 was 18,660. We've fallen 100 points from there. And I think the RBI governor's speech finished exactly around that time, I think about 10:40 or so. And of course, Lata took over with the panelists discussing the policy. Did he say anything right at the end? I mean, I heard the rate hike, no change in stance, and of course the fact that growth forecasts have been lowered. But I also heard that one line which was very Powellish, which is, we will do whatever is necessary to bring inflation down to not 2% as the Fed wants to, but closer to 4%, which is their mandate here. But in any case, I mean, we're seeing a bit of pressure, and 18,581 or so is where the Nifty is at right now. 60 points lower. It's not a big cut, but from where we were, it's a largish kind of a fall we've seen. Lata, of course, is with us as well. Lata, anything else? I mean, as I said, the fall started right around the time that the speech ended. Go on.
No, I wouldn't be surprised. I would visit it on the RBI policy. It's incrementally not so positive for risk assets. See, the market was actually penciling in a slight dilution in the stance. They were not expecting the stance to be repeated. I would venture a tad more, hawkishly. The governor went on to say that the MPC will ensure that there are calibrated hikes, and they will want to break the persistence of core inflation. This is a new thing. So far they've always spoken about headline. And core has been very persistent, mind you. It's also dependent on global inflation much more than other factors. So the governor saying that is very important, and the market is responding to that. Also, on the margin, growth has been slightly lowered, and inflation forecast has been slightly increased. The fourth quarter inflation was at 5.8, the forecast. Now it's 5.9. I agree it's incremental, 10 basis. But, when the delta of inflation is higher and the delta of growth is lower, the growth forecast is lower by 20 basis points, and not just for this year. For next year also, for the first quarter, 7.2 has become 7.1. The overall tone is growth is going to be a little less than we thought. Inflation is going to be a little worse than we thought. And the money market, the OIS, the overnight index swaps, are penciling in, after listening to the policy, even 2 rate hikes. That could be extreme, but certainly some more hikes are penciled in. And therefore, I'm not surprised that a risk asset like equity has marginally reacted negatively.
All right, Lata, stay with us, and we have more reactions coming up. But let's get in some perspective from Ajay Srivastava, CEO of Dimensions Corporate Finance. Ajay, good to have you with us here. Thanks very much.
Thank you, Prashant.
What do you make of it? I mean, you heard Lata sort of decipher what the policy was like. At the margin, maybe a little more hawkish. And, as I said, that line, our own version of we will do whatever it takes to get inflation down, I mean, it was not said in so many words, but that element was there. What did you make of it, Ajay?
See, I think Lata always does a very eloquent sum up of what's happened. And she puts in a very reasonable tone as if it's a business as usual. No. The RBI today formally declared that their policy of taming inflation has failed. Their growth is down, inflation is up, and they're at plus 5.4% even in the next year first quarter. That means a common man has been put under the bus, really speaking. For the sake of the banks, for the sake of the credit, I think for the institutions, the RBI has now convinced us that high inflation is going to be there. And the market is so robust that that's the kind of reaction you see over a major policy situation emerging, that RBI is now acknowledging that its policy of inflation targeting is failing. Its policy of inflation targeting has hit the growth but not hit inflation, which is exactly opposite what it wanted to do. And it's not going to do anything about it. It's reduced to 0.35 basis points in line with the market pressures and other pressures. It should have been, if you say inflation is my priority, then it should be a 50% basis cut. They should have taken the liquidity out of the system. He said 1.5 lakh crore liquidity still exists. How can you have a credit stance which says, I want to fight inflation, and 1.5 lakh crores of liquidity? Market is so robust right now that it's not reacting. But the fact is, lots of very bad news got delivered to us today morning.
Ajay, morning. I know you've been advocating that invest in fixed income over equities, and that perhaps is going to make you more money in 2023. But so while that point is taken, right, fixed income is going to give you more money. How bad are things going to get on the equity side? What is it that you are expecting for equity markets in 2023?
See, it's not going to get bad, because equity market is not just about economic and fundamentals, as you've all seen. It's also about demand and supply. Who's buying the equity? What's happening in India? The PF funds have to buy equity every month. So, and the SIPs come in every month. So, in India, situation is a little different. It's not necessarily that the economic bad news comes and suddenly people stop buying the market. The flow of SIP, the flow of the PF money which comes in, all comes in every month. It doesn't matter what the economy does, what RBI is saying, not saying. That money just flows in. So the demand of equity in a setup like India is so strong that lots of economic fundamentals do not get reflected in the market. They do catch up. Some point of time they catch up. Therefore, you have to be wary of investing in this market to get a return which is risk-adjusted higher than debt. It's not about making 8% return in equity. That's not good enough. You got to make it a 16% return in equity or 20% return in equity to make it worth the while. And that's what I say is a little difficult process. And what RBI said today, what did RBI say today? Saying that I will not be able to bring inflation down from 5.4% in Q1 and Q2 next year, which is very high inflation rate. My growth rate is going to dip to less than 6%. So, we are now investing in an economy which is going to have inflation of 5.4 next year in the first 2 quarters and a growth less than 6%. Take your pick. How will the growth translate? Inflation has given a lot of wondrous good news to the banks, because what you were buying at 10 rupees, now you buy at 16 rupees or 20 rupees. Therefore, the working capital borrowing goes up. But is that healthy for the economy? The answer is no, obviously, because banks, companies are paying more interest to do exactly the same amount of business. So while banks may have flattened up, the rest of the economy is actually flattened out, in fact.
Hey, Ajay, hi, afternoon. I mean, it's our 23rd birthday. I thought you'd start at least by wishing us, and then pouring cold water over our enthusiasm.
No, champagne was awaited. I was waiting and waiting and waiting. I said, no, champagne. So let me give some bad news. Maybe champagne will arrive after that to make me change my mind.
No. I'm just joking. Jokes apart, I understand. I mean, you've been saying for a while that, one should be investing into debt now, and there's not too much of an upside in equities. But having said all of that, right, at a time when the S&P 500 is down 20% this year, the Nifty is up 7%. So there's been a stark degree of outperformance that India has seen vis-a-vis most markets globally. Do you think that even if the US is headed into a recession, our markets will continue to outperform, and should the bias still be on the upside as far as equities are concerned?
See, unfortunately, I'm not a politician who has to then say कि India is better or worse than America. I look at my own little portfolio of money, my customers, and say, what's the return I've made out of for them at the end of the day? So, my horizon is a little more narrower than them. So if somebody has made worse than me, it's like, in your class, you could never go and tell your parent that, listen, I've come third in the class. But so parent will always tell you, but there were 2 ahead of you, right? They never used to say that there were 27 behind you. So, in our world, we don't look at what's behind us. We look at what is ahead of us. So comparing America is not exactly healthy. America is an economy in decline. I don't think we should compare it anymore. It's not a superpower. It's a crazy power, I would say. But for Indians, I think it's important is because our threshold rate of return, which you get, even an ordinary person in a PF gets a rate of return of 8% tax-free. Now, 8% tax-free at 30% translates to about 10% interest. Guaranteed government money available to you at 10%. So if you make 8% in equity, what the hell are you doing? You might as well give it to the government in PF and let it roll. So for common man, today it's important that his threshold goes up for return on equity, and that's become the more challenging part of it. And that is where we keep saying that the old paradigm, keep on investing, keep on holding, doesn't work. Share prices move, seasons change, movies change, stars change. Nobody wants to go and see the 4 stars of India film stars again, right? You want to see new stars. So I'm saying the whole paradigm of investment is now changing to say churn, book, reshuffle portfolio. And that's very different from 30, 40 years of logic that you hear in investment. So that's lots changing, and your 23rd birthday. So that's really young. I can't believe it's just 23, man. We found so old ourselves. You can't be just 23 at the channel, man. It can't be.
I mean, what do I even say? Ajay, it's a pleasure. I mean, thank you so much for all the wishes. And
someone called the channel a mature child.
Even on day one. Mature on day one.
I think it was Ashish, right? Who said, the NSC, who said mature. That was very apt description.
Apt way to describe it.
Ajay, great to have you with us here. But that movie analogy, who wants to see the old movie? But some movies are classics, right?
Are you worried that people are going to say that about us? Who wants to see Prashant, Sonia, Reema, and
they can say that about me, but not you guys. So I'm just sitting next to you guys, and get some of the spotlight as well. Let's take a quick break here. We'll come back. The RBI governor, of course, announced that resident entities will be permitted to hedge their gold price risk at the IFSC, which is, of course, the one in Gujarat. Manisha will be joining in along with Ashok Gautam of India International Bullion Exchange to discuss this in greater detail. That is coming up in just a bit.
Welcome back. Another key takeaway from the RBI meeting today has been that RBI has allowed residents to hedge gold at IFSC. Now, we are now joined by Ashok Gautam. He's MD and CEO at IBX to understand the deeper impacts of this. Ashok, hi, thank you so much for joining us. As of now, what products that IFC and IBX have, and as the RBI has now allowed hedging, how soon can we start that, first of all?
Thank you, Manisha. This is, I think, a very good development for the whole IFSC ecosystem, for the exchanges which are there. And there are always the gold future product which can be launched on the exchanges very quickly. And now that these RBI directions have come and we await the circulars for the operating part, we will be very much ready to offer the gold futures and also going forward gold options for the resident Indians. Here, just we'll also try to understand once the circle comes what the resident entities mean. We already have entity defined as qualified jewelers who are already on our exchange. So 75 entities are already there, 35 applications in pipeline. So the big jewelers and the bullion dealers are already onboarded, and we'll soon gear up ourselves to provide the products as soon as the instructions are ready.
Mr. Gautam, as you said, there still is a bit of an understanding required on what residence actually means. But the point being that it is only hedging. So clearly trading and speculating is something that is not going to be allowed. Apart from that, as RBI said, that it is overall IFSC. Apart from IBX, the banks which are situated there, how big an opportunity is it for overall IFSC ecosystem?
Manisha, the way now I read it, it talks about gold price risk on recognized exchanges in the IFSC. So essentially, they are still talking about the recognized stock exchanges, and that's where we come in. I also just want to make one more point through your channel is that many of the jewelers had been talking to us because they said today on IBX you are pricing the gold on spot. But many times they have a working capital cycle on which the gold bar gets converted into jewelry and gets sold, and they would like to also hedge it. And because now this has been permitted, this will give a great fillip to the jewelers who are using the IBX services, and they'll be able to hedge their international prices, that is the XAU USD price risk on the exchanges. I think it's a very positive development thanks to Reserve Bank of India, and it will give a great fillip to the IFSC financial ecosystem.
Perfect. Okay.
Manisha as well as Ashok, thanks a lot for joining in and talking about the hedging of gold on exchanges. For the market, it's very quiet really. The Nifty, although it has moved to the low point of trade, it's nothing alarming. It's down just about 70 odd points. The Bank Nifty is down about 150 points. So after that initial sell-off that we saw around 10:30, the market is stabilized at these levels. Let's slip into a quick break. But on the other side, joining us to partake in our 23rd birthday celebrations and to talk about the post-RBI policy moves, we have Seshagiri Rao, the Joint MD and Group CFO of JSW Steel. He'll also be giving us an outlook on the steel sector. Stay tuned. Well, thanks for staying tuned to CNBC TV18. This is a part of our 23rd birthday celebrations. The markets are a bit under pressure post the RBI policy, and the focus this afternoon is on steel stocks, which are under pressure on the back of a pullback that we've seen in steel prices as well as weak global cues. And now with central banks across the world and in India hiking rates, the possibility of more rate hikes, there is a question on demand sustenance as well. Seshagiri Rao, the Joint MD and Group CFO of JSW Steel, joins us now to discuss more on this. Mr. Rao, good morning, and first of all, thank you for joining us. It's a big day for us here on CNBC TV18. We are celebrating 23 years since the launch, and it's great to have industry veterans like you on board. So thank you for that. But, in a situation when there is this rate hiking cycle across the globe as well as in India, do you think demand could be under pressure, especially for sectors like steel? What's your outlook for the next 1 year?
Good morning. Many happy returns of the day. I wish you all the best, and very transparent way of communicating what is happening exactly in the market. So I wish you to continue the same in future. All the best. Coming back to your question about the steel industry outlook in the current economic environment, in the last few days, if you see the global macroeconomic developments, they are quite positive. One is gradual coming down of inflation in US and also in other places. That is one positive. Second is the very high oil and energy prices in the Europe, including electricity. They have come down by almost 2/3 in the Europe. That is also very positive. The third is the Chinese. The stimulus which they announced for the property sector and also relaxation of COVID restrictions. These are positive macroeconomic developments that augurs well in the next year, that is 2023. But as on date, if we look at globally, the steel demand has come down. In line with the fall in the steel demand, the production also is getting adjusted. The fall in demand is close to 3 to 4% globally. In line with that, there is a fall in production also by 4%. But one divergence here is the fall in production is much steeper in the rest of the world compared to China. China is still producing a lot of steel. That's why the prices in China has fallen much steeper when compared to other economies. So, but in the last few days, based on these economic developments, we are seeing a slight improvement in the steel prices in China. So in these circumstances, if we look at as far as India is concerned, it is a very good growth in steel demand in India. In the first 8 months of the year, up to November, financially.
Right. Mr. Rao, good morning. Sorry to interrupt. Limited time, so want to get the most out of the interview. Prashant here. Good to speak with you again, sir, and thank you for being here. Just on prices, you're saying the situation is good, but what has happened to prices in India? Has there been any change in prices in December or in the last 1 month so far?
Prices have corrected by 3 to 4% in India, in line with what is happening globally. When global prices fall, automatically even Indian steel prices should get corrected. In line with that, we have seen a correction of 3 to 4% in India.
That is now at par with global prices?
Global prices also corrected. That's why steel being a global commodity, the domestic prices in India follow what is the landed cost of imports. In line with that, Indian prices also corrected.
So is there any difference in the domestic steel prices and the imported steel prices from China and Korea?
As far as imports are concerned, they are going up. They have gone up by 22% in the first 8 months of the year. So imports are increasing to India because the global economy is not doing well. Indian economy is doing reasonably well. The domestic demand has gone up by 8 million tons in the first 8 months of the year. That is why we are seeing increase in demand and fall in exports. So both together, there is a pressure on prices. So today, if I compare with the landed cost of imports, domestic prices are almost similar lines.
Mr. Rao, good morning and thank you for joining us on the big day. Can you tell us how cost of capital may go? It looks like it's increased internally, it's increased abroad. Will that stymie any of your capex plans?
The cost of financing is going up, definitely, but relative to what Indian corporates can raise overseas, still it is very attractive to raise money in the Indian markets. So Indian interest rates, even though have gone up, but as far as the access to, on a relative basis, to domestic markets is attractive. That is why the cost of financing has gone up, but I don't think because of which any company will hold the capex, because the long-term story of India is very encouraging.
Long-term story is encouraging. You mentioned briefly, Mr. Rao, that demand for steel has fallen about 3 to 4% globally. Back home, what kind of demand are you looking at? How is it compared to, say, what we saw same time last year? And what is the prognosis?
As far as the global steel demand is concerned, what WSA is estimating, next year there will be a growth of 1%. China will remain more or less same. But the rest of the world, there could be a recovery as far as the overall steel demand is concerned. But as far as India is concerned, India's story is quite okay. In this year, financial year, we expect there is a 12 million ton of incremental demand. Last year, 106 million ton. In this year, we expect it will be close to 117 million ton. It should further accelerate as far as domestic demand is concerned. Only opportunity to export may be limited in the next year, considering the very marginal growth in the global steel demand.
The other point is also significant, what you said, right? Because demand is very strong here. There is more import. Imports are rising rapidly. So that keeps prices under check. On auto sort of negotiation with auto OEMs, have fresh negotiations taken place? Have prices been agreed upon? And what do they look like now?
As far as the auto sector is concerned, there is a pricing formula which steel companies and auto companies have already agreed. It is based on whatever price that is prevailing in the last 6 months. The average of that will be the price for the next 6 months. That is how the prices will get determined. Sometimes based on market conditions and volatility, it could change from half year to quarterly. That is exactly what is happening as far as the auto sector is concerned.
Mr. Rao, great conversation, but unfortunately we're out of time. Thank you very much for joining us on this special day. That's JSW Steel for you. Get into a break. On the other side, we'll talk more about the markets. Welcome back. The RBI event is done, and now all eyes on the winter session of the Parliament, which will begin today. 16 bills are expected to be tabled in a span of 17 days, so it's going to be a hectic one. Listen in to what Prime Minister Narendra Modi had to say ahead of the session.
शीतकालीन सत्र का आज प्रथम दिवस है। ये सत्र महत्वपूर्ण इसलिए है क्योंकि 15 अगस्त के पहले हम मिले थे। 15 अगस्त को आज़ादी के 75 वर्ष पूर्ण हुए और अब हम अमृतकाल की यात्रा में आगे बढ़ रहे हैं। एक ऐसे समय हम लोग आज मिल रहे हैं जब देश को, हमारे हिंदुस्तान को G20 की मेजबानी का अवसर मिला है। विश्व समुदाय में जिस प्रकार से भारत का स्थान बना है, जिस प्रकार से भारत से अपेक्षाएं बढ़ी हैं और जिस प्रकार से भारत वैश्विक मंच पर अपनी भागीदारी बढ़ाता जा रहा है, ऐसे समय ये G20 की मेजबानी भारत को मिलना एक बहुत ही बड़ा अवसर है।
All right, well, let's do one thing. Let's slip into a quick break on that note. On the other side, an exclusive conversation lined up with KK Mistry, the Vice Chairman and CEO of HDFC, coming up in just a bit. Stay tuned.
Okay, welcome back. 60 points lower. We're at 18,579 and things are under some pressure, a little bit of pullback is what we've seen. And this pullback is exactly an hour old. 10:40 or so is when the market made its high for the day. And from there, we've come off from that point, we've come off quite a bit. KK Mistry is now joining us, Vice Chairman and CEO of HDFC Limited. KK, great to have you with us here. Thank you very much for your time. Good morning, Prashant this side. Your sense of what the RBI did today in terms of policy, incrementally, should we read this as a little more hawkish? Should we have expected anything else? From a stock market point of view, that seems to be one strain of voice which is coming through to us. But your sense, sir?
Prashant, my sense is that we were all expecting a 35-odd basis points increase in the repo rate. I remember in the interview after the last policy, my view was that we would see another 30-35 basis points rise. I think the governor has kept the door open for a possible small hike in the next policy, possible. That is perhaps will emanate out depending on the data that comes through. And the data will also depend to a great extent on global events, what Fed does and so many other things. But generally speaking, I think we've reached almost the peak of the interest rate cycle. So at most, I repeat, 20-25 basis points hike in rates in the next policy, but then there will, to my mind, be a clear stop thereafter.
Okay, so just one more rate hike on the anvil, and that will be a small one, just about 20 to 25 basis points rate hike, right? Less than what we've seen.
That would be my reading. That would exactly be my reading. And even that 2025 may or may not happen. It will be hugely dependent on the type of data that comes through over the coming weeks.
Okay. Mr. Mistry, good afternoon and thanks for joining in. How do you see the real estate market behave now if there is this incremental 25 basis points rate hike? Up until now, I don't think the rate hikes have mattered too much in terms of demand. But what is your assessment of the way forward?
So, Sonia, my sense is that when a person is looking to buy a house, it's a long-term investment he's making. It's the single largest investment he makes in his lifetime. And because it's the largest investment, he wants to be comfortable that the property prices are right, the developer is good, he'll complete the project, the family likes the house. Interest rates don't make that much of a difference at that point of time. Also, we must understand that a housing loan on a door-to-door basis is nearly a 13 or a 15-year loan. And over 15 years, interest rates in India will go up and interest rates will come down. So it really does not make so much difference in a long-term loan whether interest rates are high at the time you take a loan or low at the time you take a loan. If they are high, they'll come down. If they are low, they will go up over that period of time. Interest rates become much more relevant for a shorter term loan. And in India, nobody can afford to give a fixed rate 15-year loan because otherwise you'd end up taking a huge maturity mismatch. So therefore, my sense is that the demand for housing will continue unabated. Sentiment-wise, every time there is an increase in rates, there is a marginal impact, but it's a very, very marginal impact. And within a period of a couple of weeks thereafter, the growth reverts back to the original level. So I would say demand will continue to sustain.
Right. Mr. Mistry, we've had many builders speaking to us over the last fortnight or so. We had DLF, we had Prestige, we had others as well, who came on and said that around as you get closer to the 9% odd level, home loan rate level, there is some amount of buyer hesitation which they've seen historically. I mean, 8.5, I mean, that is absorbed. But as you approach 9, it gets a little, I mean, there is an impact. Have you seen something similar, and where are we now? Yeah.
So, Prashant, we are not close to 9 at the moment. We still have some distance to go, and including this policy, and even if we do a 20-25 basis points hike in rates thereafter, I don't think we'll get to 9. But historically, interest rates for housing in India have been 9.5% many, many times over the last 7 or 8 years. If you take 2013, 2017, and various other points of time, housing loan rates in India have been 9.5%, and at 9.5%, the growth has still sustained and has remained strong. When it gets into double digit, then it becomes a little bit of a psychological kind of an issue. But I don't believe we are going to get anywhere close to that.
Okay, so double digit is when perhaps things turn a bit south. So I'm reading a statement that's come from Knight Frank. They're saying affordability of the home buyers has come down by 10% since the beginning of the interest rate hike cycle. That, coupled with high inflation, rising rates, do you expect housing demand in 2023 to be less than what we've seen in 2022? And if yes, by how much? And if you could provide some more nuance to that.
Sorry, I would believe that the growth will only accelerate over time. And the growth will accelerate over time if you look at HDFC in particular, as a result of the merger with the bank, the growth can only accelerate because the full machinery of the bank's distribution will be used for, sourcing loans for us. Today, it's a very small part of the total number of branches of HDFC Bank that source loans for us. So that's one. The other is the penetration level of mortgages amongst the bank customers is very low, and that can only increase over time, but that's specific to us. But if you look at the system as a whole, I think the runway ahead is very, very long, very big. Structurally, demand for housing will always remain strong as long as the feel-good effect is there in the economy. People are comfortable, people are, their jobs are secure, people are seeing salary rises. Historically, we've seen that has a huge impact in terms of the willingness of people to buy a house, not so much interest rates. So interest rates there, psychologically, yes, little bit, but not that relevant.
In this current environment, what kind of improvement do you see in wholesale lending? I mean, you've been present there as well. So what's the outlook there?
So wholesale lending, as I mentioned, I think one time earlier on your show, the reality is that in a wholesale loan, a construction finance loan, for example, the disbursements tend to be more back-ended than front-ended. Because now if you go back to the last 4 or 5 years, the period from 2016 to 2020 was a period when there were not too many projects launched, particularly in the metros. Post-2020, I would say the middle of 2020, demand for housing has picked up, as you can see the data, in a very substantial manner. As the demand for housing has picked up, clearly more and more developers are launching newer and newer projects, bigger projects, larger projects, and so on and so forth. But the disbursement for these loans will only come on a back-ended basis, because first the developer, he applies for a loan, gets a loan, then he, buys the land which he's planning to buy. After he's bought the land, he has to start construction, and only thereafter the bank starts disbursing. Right. So there is a delay in making disbursements. So pipeline is reasonably good. Pickup will be there, but over a period of time, not right away.
Mr. Mistry, so good to hear from you as always. Appreciate you joining us here on this very special day. Always insightful. Thank you very much for your time on CNBC-TV18.
Congratulate you, your 25th year. So let me wish CNBC-TV18 and your entire team a very happy 23rd anniversary. I think it's been an extraordinary journey covering business and economy, not just in India, but globally. And one can easily see the way CNBC has constantly upgraded itself with the changing needs. A lot of credit goes to you for bringing business news and educating the investors in a seamless manner. So let me congratulate the entire team for all the good work you've done over the years.
Thank you. Thank you, Mr. Mistry. Thank you from all of us here. Really appreciate it. Thank you. We'll take a break here. We're back and more on the other side.
CNBC-TV18, celebrating 23 years of business leadership.